You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, you've been watching the banking crisis unfold, second largest bank collapse in history, although I would argue that in 08 and 09, virtually every bank in the country collapsed, but we didn't really publicize it as such. But where there's an actual governmental takeover of the bank and a forced sale, I'm sure Jamie Dimon is real happy today. You get to build the assets of the bank for virtually no cost and have the government pretty much take on all the risk. Well, that's capitalism in America today. But more importantly, what is the impact on the stock market? What is the impact upon your portfolio, your wealth? And that's why we've got Chris Vermeulen, technicaltrader.com, with us. And Chris, great to have you back on. So I assume you've been watching this market turmoil here. What are the charts telling us?
Yeah, well, thanks for having me on the show, Kerry. I mean, it's pretty wild. I mean, not that long ago, the Fed and everybody was saying, the banks are not that weak. They're, we're okay. I mean, things are just kind of falling apart. It's kind of scary. I think there's pretty dark times ahead in terms of the financial markets, a big recession coming. We're seeing, banking stocks are collapsing. They're down huge. They're really pulling a lot of the market down with it here because they're heavyweights. They're big companies. And of course, slow economic times is kind of picking up here, and that's hurting crude oil. We got the energy and financials down huge today. And those are two huge, massive players in terms of what's kind of holding the stock market or pulling the market down today. I mean, it's really frustrating to see these banks kind of go under and how brittle the whole system is. And to be honest, I feel like we haven't even started getting into anything bad yet, and the banks are already shattering and falling apart. So who knows what it's going to be like and what the government and the Fed's going to put in place to try and save the day this time around. But, this is just the very beginning, I think, of a lot of difficult times, especially in the banking sector. I think a lot of them, these high rates are going to definitely hurt the banks. And if they don't eventually start lowering these rates, there's going to probably be more defaults and issues taking place.
Yeah, well, and this isn't just U.S. This is global we're talking about here, right?
Oh, for sure. Yeah.
Every bank, because every bank is a fractional reserve Ponzi scheme waiting to blow up. Because when you have no reserves, which the Fed got rid of the reserve requirement years ago, and now everybody's deposits are fully insured, in quotes, the risk-taking, all the problems that came up in 08 and 09, the last collapse, didn't go away. Nothing was fixed. Dodd-Frank was going to fix it all. Dodd-Frank has turned out to be a farce because the whole premise of Dodd-Frank was flawed. The idea that there would be bank bail-ins, that you could just say to the depositors, all right, well, the bank's gone now, and you're going to pay your fair share of the bail-in, could never work because it undermines the confidence in the entire system and leads to bank runs. And really, during the last crisis, the Fed had, I should say, the FDIC, the U.S. government, the Treasury, basically backstopped all deposits 100%. And then they got rid of that. And that will probably be the big mistake that led to this current banking collapse.
For sure. I know. And it's tough because not much money is really protected. Like here in Canada where I am, your bank account's only insured for only $100,000. So a lot less than it is in the States. I did find there are some different places in Canada, different types of brokers you can go to that actually insure up to $1 million for your account, which is pretty substantial. So, and I did notice they're actually open to anyone. Doesn't matter where you're from. You have the opportunity to put money in these types of accounts, and they're insured for $1 million. So It's pretty interesting. I've been looking into that because $100,000 is not much protection. And it's scary. I mean, banks, you look at Silicon Valley Bank, I mean, it's like a 48-hour window. It's like a run and boom, it's gone. And who knows how quickly things can happen now. I mean,
it's gone.
Yeah.
Yeah. Just like I think in the U.S., SIPC used to be like $2 million for securities insurance in your brokerage account.
Right. Yeah.
That could be a SPIC. They call it SIPC.
Right. Yeah.
Limit.
Well, I put it this way. No one's really feeling all that safe in the banking industry. And I mean, banking stocks are getting hit. Nobody's going to want to own them. People are pulling their money out. They're moving into physical metals. Like we're seeing gold jump, 1.5% as you and I are speaking on this news today.
Yeah.
Silver's up 1% and change. Gold miners are heading higher. Bitcoin is up. So people are definitely looking for, a reserve currency, a currency that actually has something behind it. Well, at least physical metals do. And I mean, that's just kind of the safe haven play. People are really worried and they'd rather own something physical than, put your money in the bank and hope and pray the next headline isn't your bank.
Yeah. Well, the too big to fail national bank down the street here, look, push comes to shove, the government will destroy the currency to save the banks, because if you can't save the banks, then the currency isn't going to mean anything anyway.
And I think people will get numb to this. I mean, I'm already starting to get a little numb. I mean, if you're not expecting these banks to blow up, you're not in touch with reality. We're going to, I think, see more of these. It's just going to be the norm. That's the way I see it. I mean, this financial system's been brittle since way before 2008. I mean, it's just constantly change the game rules, dump money in, print money, try and fix the game. I mean, everything's going to keep falling apart. You can only break the system and keep funding it for so long. So I think this whole banking system, people are going to start to get numb to it. I mean, you see the news today. It's nothing earth shattering. It's like, oh, it's another bank's gone down. It's not like, oh my gosh, what's going to happen to the rest of the world like people did in the 2008 crisis. It's just like, oh, another bank imploded. Federal government's going to come in and help and do something. So eventually this is going to just continue to, I think, increase the numbness of people in these severe problems. And I mean, it's interesting because what's happening now is like, before 2008 is a huge deal. And for some reason, I don't really feel like it's that big of a deal. I've been expecting it, and the markets, kind of somewhat have been expecting as well. I mean, the financial system, if this was even worse, I think we'd see the system down a whole lot more. But people are already like, oh, it's just another bank going under. It's going to get dealt with in the next few days. Somebody's going to pick up the assets, all that stuff. So it's frustrating, but it's just the way that the markets move now. Things break and then they get scraped and put together in a new way, a week or two later now.
Chewing gum and paper clips, holding the whole system together.
Yeah.
Right.
Yeah.
So gold's shown a lot of strength, back over $2,000 an ounce. Silver, all right, it's got to be the screaming buy of the century. My friend Nick Santiago, he says that gold is the new VIX, and
it could be,
and silver as well. Silver is back over 25. 2 days ago, it was approaching 26, slammed down. Now it's going higher for sure. So silver, gold, how do you play it? Do you take the physical at this point and do some paper trading, or do you just go all physical?
It depends. Depends on the type of trader or investor you are, right? If you're more along the investment lines, I think physical is the way to go. If you're not looking to flip it for quick money, I think there's a lot of upside potential over the next several years for physical metal or metals in general. So I think owning physical is a great play. And then, of course, if you want to get in on the action and be more aggressive, I mean, getting into the ETFs based around them is a great way to play. The Sprott ETFs have the backed kind of physical ETFs around them. I mean, I think there's huge potential for silver and gold to skyrocket, and I think they're going to be a really good play. It'll be interesting, though. I'm still a little weary on where things are headed. Maybe gold and silver will continue to rocket higher and break out. I mean, we got to still see a big breakout on that. When we look at the charts of gold, if I can pull up the charts here, we can take a look at the monthly chart, which gives you a good idea of still where we're kind of struggling in terms of gold. Let me flip to the gold chart.
Right.
We still have these long upper wicks. You should be able to see my charts there. And we got these long upper wicks where, we had kind of a news-driven event that created a big spike in gold. We had another big drive up in gold. We had that last month as well. All of these are just slightly declining highs. They're just slightly under the last one. And so this month could be a really critical month. This month, if it can close up above, it's around 2089, somewhere in there. If we close above there on a monthly basis, this long-term trend, this long-term kind of super cycle in gold to the upside, I mean, the next stop after that should be about 2,700 for gold. So that'll be a huge move. And that could be the banking system really collapsing, and no one wants to keep their money in paper assets or in the banks, and people are flooding in. So we could very easily see that take place. If we take a look at silver, let's pull up the silver chart, and silver, a lot more volatile, but it has a lot more potential that if it can start breaking out here, it could very easily scream back up to that $50 per ounce, which is a nice 100% return from where it is right now. And something like that could happen fairly quickly. You can see the last time it broke out, it took about 9 months or so to fully break out and run. So that could be the financial markets melting down, breaking down, people not trusting, having paper money in the banks, and people piling into physical metals. And maybe we finally get that short squeeze everybody's been talking about in gold and silver, where things just go absolutely ballistic. So I'm a huge fan of precious metals long term. There still might be a little bit of headwind depending how the stock market, if the economy gets tough and we see a big wave of selling in the markets, it can pull precious metals down. It usually does. So it might actually mute gold and silver for a little bit until maybe a lot of that panic selling is dissipated later this year, and then we see gold and silver break out. But right now, gold and silver are threatening these previous highs from really about a year or so ago. And if they can break those, we could be off to the races on a monthly basis. We're looking at some huge gains. So I think playing both sides, gold miners, if we do get a breakout in gold and silver, gold miners could be a huge opportunity. They could be one of the sectors that bucks the bear market. And as you know, gold miners, doesn't matter if it's a penny stock or not, they can double, triple, quadruple very quickly in the right market conditions. And maybe we're getting closer to that. I mean, I think it's coming. It's a matter of just maybe late this year or next year, probably at the latest. But we're definitely really close. It could start any week here or any month. And that whole precious metal space could be absolutely ballistic, and everybody piles into it. So I'm pretty excited about it.
All right. So, I've had various experts on the show. One recently who said we're going to have a major market crash come Q3, maybe the end of Q2, after July, though, he said. And that's going to lead to a massive worldwide global depression that I guess will carry on for a while. What's your thoughts?
I feel like we could see something like that, like where we are right now in this kind of what I call a complacency kind of rally, meaning a lot of people thought 2022 was the bear market in stocks. It was a big correction. This is a bounce. Everybody thinking that is more or less over. But after a complacency rally, we go into a full-on waterfall sell-off, something that could be very, very dramatic. And the scenario we're in right now with this complacency rally is just a bit bigger version of this complacency rally we saw over here in 2007, 2008, just before we went into that financial crisis, the stage 4 decline. And so I feel like we're going to be going into a stage 4 decline. I've talked about this many times. You and I've talked about it. Stage 4 decline is what we saw in 2001 after the tech bubble. So, we've only had 2 stage 4 declines since 2000, and I think we're about to enter another one. And most investors who got into the markets really, in the last 10 years, 13 years, haven't experienced what that is like yet, or how to manage their money or protect their capital. And this is going to be a devastating blow. I think it's just a matter of time when it happens, but we'll just have to, let the charts play out. But we're definitely in this scenario where I think we are going to get there. And this type of sell-off, this huge sell-off, that is what will pull potentially precious metals down. When there is mass panic and selling in the market, there's going to be margin calls. There's going to be all kinds of things where investors don't want to sell their gold. They don't want to sell silver or miners, but their other positions, their long-term investments are down so much that they get margin calls, and the broker will just start liquidating positions to cover. And that's what creates a waterfall sell-off, even in precious metals. Even when it's the perfect scenario for them to move higher, they can get pulled down with a stage 4 decline. During 2008, it was a perfect scenario for gold, but gold still fell 34% during that. And then it was one of the first commodities and asset classes to rally, and gold took off and skyrocketed into 2012 to hit this 2000 mark that we're flirting with now. So we could still see that. If I flip back to the gold chart real quick, we could still see that happen in gold, meaning here's the 2008 bear market. Gold pulled back 34%. If we go into another stage 4 decline, it's possible gold gets pulled back down to the lower end of this range somewhere in here. And then it'll be one of the first to turn around and rip higher, and it won't look back for years. I think we could see a multi-year rally, huge returns. That's when gold, silver, and miners, to me, are going to be an absolute screaming buy. Unless gold breaks out now and just starts to run. If it starts to run, it's off to the races. But it has to break these upper levels, 2089, close on a monthly basis above that. That's kind of what I'm really looking for.
Not there yet. Doesn't look like it's there.
Yeah, we're not there yet.
But you got three, what do you call it? 3 peaks, right? So that would
triple top, maybe
bearish, 3 tops. That would normally be a bearish pattern, but in this case, it's the opposite.
We'll see. Well, we got to let it play out. Is it going to get rejected, or is it going to rally? And that's the nice thing about technical analysis is I follow the price, so I don't really care too much about what's going on in the news, and I don't really try to predict. I like to get some ideas of what it could do, but I'll never invest or trade just on dreams going, oh, I think I want it to go up here. It looks like it could go up here or fall down to here. I wait for the price to confirm, so you won't catch me trying to, pick a direction before it's actually gone in that direction. And right now, gold is struggling at resistance. And people will probably say it's not struggling, but I would say it is struggling because just last month it ran all the way up, almost broke out, and then got sold right back down. Today's bounce, if we look at it on a 30-minute chart here, and just look at this 30-minute chart, we saw, gold, it dropped sharply from this 2020 level just about a week and a half ago. And then it got back up there, it gapped higher and got crushed. It gapped up higher yesterday, got crushed. Today, it's a news-driven move back up to that level. So gold is to me, is still struggling. It got up to this level, but sold off by the end of the month or last month, and it's still chopping around. So it is struggling at resistance. But if it can start to clear last month's high, the previous high over here, and this high, and close above there on a monthly basis, that is going to be a huge breakout. I shared a video a while ago talking about the last time we got into when we started this super cycle. We were in a stage 1 base, which is a very important level. And then I drew on the charts everywhere where I accumulated a bunch of gold and silver, physical gold, all the way up to about this level up here. So I had all kinds of buys in here. And now it's just consolidating in this giant bull flag, this super cycle bull flag, primed and ready to eventually move higher. In a perfect world, I'd love to see it come down. I'd love to buy one last tranche of physical buyers of silver and gold, and then just watch it take off.
Yeah.
But we'll have to see. And it's trying to break out, but it's still news driving gold up, and it's in resistance, which to me is a little bit of a bearish sign. It's just a lot of news. It's the herd mentality pushing price up here. It doesn't feel like it's real, true, full-on true demand just yet.
Yeah. And so if you're looking at gold or silver, all right, gold's going near all-time highs. Silver is still at 50%. So is silver the better buy? Because it's been in the trough there at the low end in a bear market, basically going back to 2011.
Yeah, I believe you should have both. I have both. You never know which one is going to be the big runner. And the markets always have a way of catching you off guard. And generally, silver will play catch up. It might lag a little bit. Gold might break and run and hit new highs first, which it's pretty darn close to doing. Silver is a long ways from hitting new highs. But once the money starts really truly flowing into the precious metal space, where the average Joe says, I want to buy some gold, buy me some silver. They call their advisors, whatever, however they do it. That's when we see silver really play catch up and skyrocket. But right now, I think gold is the global asset. Everyone around the world is saying, I'd like to get a little bit of gold. They're accumulating it. But it's just a warm up phase before I think the tide turns, where the average investor starts talking about gold again and wanting to get it. But silver percentage wise, I mean, it could definitely, outperform gold dramatically. I mean, it can be 100% return, while gold only goes from 2,000 to 2,600, which is, not that big of a return percentage wise. So silver's got that percentage, but gold is kind of that. I think you need to have some, because to me, it's the more conservative play. But there's, talks about currencies being backed by gold, and gold to me is the more global reserve currency. Silver's more speculative. And so I always want to make sure I hold some of that real core basket of gold, just in case it's the one that for some reason, goes to some ridiculous value. You'd hate to have everything in silver and then watch, the big expensive gold just keep going up and up and up, because you never know where a peak will be when all hell breaks loose. Who would have thought, $100,000 Bitcoin would have happened, right? So, it really just goes to show any price is possible. Gold could be some crazy price, and silver might struggle more. And nobody thought you'd see crude oil go negative, and it did, right? So now anything is possible. So you definitely need to spread it out, have, I think, both metals just in case.
All right. Well, we could go over other commodities, but I think the primary focus here with the banking turmoil that's taking place now, this is the best place to be. I appreciate you coming on and shedding some light on these pretty weighty topics here, Chris. Again, the website is thetechnicaltraders.com, and you can just send me an email if you got a question for Chris or myself, kl@kerrylutz.com. And there's a link in the show notes to this interview on financialsurvivalnetwork.com. Take you right to Chris's site. And hey, while you're there, sign up for your free newsletter. Chris, always a pleasure. Thanks for stopping by.
Thanks for having me, Kerry. Yeah, always a pleasure. Take care.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.